All right, folks. Finally, we have a Green Day, a decent, not solid Green Day. All right, I can't remember the last time we had a Green Day on AMC for the last 2-3 weeks. Yes, we had only one. And yeah, so as I mentioned this, multiple times now, a stock cannot continue to go down significantly forever. At some point, it has to reverse because it gets to a point where it's too cheap not to buy it. And that's how just the stock market works. So let me share with you some things here that I think many people are not really paying attention to. And I think as AMC shareholders or holders or investors, you need to pay attention to it because there is a change happening. There is a new season that we're looking at. But few people already, are even aware of this. So that's precisely what I want to focus now because today, besides the stock price of AMC being green, finally, we had earnings season that just started. All right. But we also have oil heading back to above $100 a barrel. Yes. So on one hand, we have these shifts or, this confirmation into what we're heading towards too, that are going to be totally a major issue for people still short sold or short selling a stock like AMC. Because on one hand, the fact that oil is not going back down, as a matter of fact, it's going to over above between 105 to 110, maybe 120 to a long stretch, but it's not going back down to 100 anytime soon. That's what at least I say it. So that will make sure that, that will confirm the fact that inflation is going to remain very, very high. And if inflation remains very, very high, it means Federal Reserve is going to continue to do what they need to do to bring it down. All right. But even if they think they can do that without crashing the economy, is not entirely sure. But the bottom line is interest rates are going to increase because inflation is not going back down anytime soon. So that's number one. Number two, today we had also earnings season that kicked with the major banks, and JP Morgan Chase reported $524 million hit from market dislocations caused by the Russia sanctions. Now, let's stop here for a second and think a little bit deeper. JP Morgan Chase was not even the major bank having the most exposure in Russia. That was Citigroup, because when this whole thing started, Citigroup reported that, hey, by the way, we are exposed to $10 billion in the Russian economy. So we are about to lose double-digit billion dollars. So that's going to be reflected into their earnings, all right? So if you think a bank like JP Morgan Chase, not even being on the top of the US banks having that exposure to Russia with the sanctions, they're already losing $500 million, more than $500 million. What do you think is going to be the case for those banks like Citi, or maybe Bank of America, or maybe Goldman Sachs or Morgan Stanley, which, by the way, are also market makers, are also liquidity providers. So liquidity providers for all of these companies that are short selling AMC. So if these companies, if these banks are already taking huge amount of hits just because of the sanctions, and we don't know where the economy is heading towards for at least the remainder of this year, what is going to happen? Do you think they're going to still continue to work with these short sellers by providing them facilities that were allowing them to turn around as quick as the market turns around? Because the money is gone. So if the money is already gone and they are in shortage of that liquidity, it means that at a sudden change of headwinds in the market going against the direction, because it's going to come. And by that I mean, when the buying pressure on AMC comes back or the next run-up comes up, well, it's going to be very, very, very difficult for these little short sellers to continue to hold on to these positions, because they cannot try to work with the banks, because these banks are also losing a ton of money. So they're going to restrict whatever facilities they were doing so far, especially in an environment where money is already going to be a lot more expensive, folks. So that means if they want to continue to remain in this play, they will have to come up with so much more money or so much more collateral. But the thing is, in this environment, that will be very, very difficult. So Either way, they are doomed. They are doomed. And little by little, as they start falling, then the price can now achieve or attain a certain level that will be a no-brainer for the big guys, the big dogs, to get out. And that is when we hit the real moon once and for all. Now, the thing is, when that happens, will you be ready? Or do you have the balls big enough to make sure that you take advantage of that, or you don't get out before it happens? Because I'm pretty confident it's going to happen. I may be wrong, but I'm pretty confident from looking at what I just shared with you that it may happen. So let's just see how the next 4 to 8 weeks look. But yeah, as always, just be patient.